We are back with Tim Regan. A viewer here reminding me, pointing out that Timothy Hodgson, who's been named Energy and Mining Minister, was formerly on the board at Meg Energy. So, as you say, it may be his appointment seen as trying to build a bridge to the energy industry.
Definitely an olive branch.
Right. Okay. You have some stock ideas for us. Uber, why are you attracted to this name?
Sure. I think with Uber right now, it's a unique company that really dominates its market around the globe. We bought it in early January when there was a little hiccup to the price, but they're growing their free cash flow at 20%. We bought it at, I think, about 11 times free cash flow. We tend to be value managers. They put us in that camp, and people say, that's not a value stock. Really, it is. You're getting the best of valuation, and you're getting the best of growth. How prevalent is Uber? We see it all the time, but it still has a long runway in the rest of the world.
And they have the delivery as well as driving us around.
Absolutely. Advertising is now a multi-billion-dollar revenue stream. It's big.
Given the threat, though, to U.S. tourism, investors, well, of course, they're so global. They're not just U.S.
Yeah. I mean, the U.S. is a big market, but now that they're growing globally, it's, the world is really their oyster, and they've done a tremendous job with the business.
Are you looking forward to hailing an Uber and it shows up and there's no driver?
I don't know about that, but Waymo is another one. But, it's in San Francisco. It's coming. We keep our eye on that. And there's a good podcast by Malcolm Gladwell on autonomous cars, if anyone wants to listen to it, just on how he doesn't see it coming, and he and his friend would run in front of the cars to stop them constantly because of the technology they have in them. But they're safe.
So this was a person pranking or something?
No, he just wanted to test it. It's in his podcast. It's a very interesting podcast if people want to listen to it.
Oh, you always learn something from Malcolm Gladwell. EQB, a non-bank lender. Why do you favor this stock, Tim?
Well, EQB is the challenger bank. We all know the big five, big six, if we want to call them. EQB has a market cap of under $4 billion. We bought it a long time ago, probably if you go back 10 years or so. It's been great. As you can see, it's had a little dip. A lot of that was really just, they're primarily in mortgages, but they've been growing. They trade today at 8 times earnings, and they're growing. We think that, the valuation without a P multiple expansion, if you will, that the share price can grow at 20% a year going forward. So we quite like it, and it has a long runway as it's a smaller challenger.
And we hear a lot, they're a provider of mortgages to non-standard customers, entrepreneurs, etc. Do you see, is that a big part of their franchise? I haven't even looked lately.
It is. They're very digital, so they go through mortgage brokers. They do have some, part of why they're down a bit, they do have some financing leases, equipment leases. And that factored in, but it's all very manageable when one really looks down into their balance sheet. And I think, they've probably been unduly punished in the last 3 or 4 months.
SmartCentres REIT. You like the look of this one. They say, we remain Walmart's only real estate development partner in the world.
Well, the interesting thing about SmartCentres is we think SmartCentres, if you look at the chart, is worth about $35 a share just with its real estate today. $35. It has a 7.2% yield. But what most people don't realize is when we talked about housing development, they have 60 million square feet of zone mixed-use development. This is stuff that's zoned. They don't have to develop it right away. It's going to be in the next 5 to 15 years or so when markets improve. But you have to think about when one builds a condo, I think it's about 18% of the cost is the government and the regulatory.
Sure.
20 to 25 is land. What they're doing is they're building condos on top of their SmartCentres, on top of the Walmarts, on top of the retail. For Mitch Goldhar, who runs it, the land is free, and he's proven to be a very good developer. Just look at the Vaughan Metropolitan Terminus. It's been fabulous. But when you look at it, this 60 million square feet of zoned use, they are developing some now, but it's zoned. It's a free option on an undervalued company. So we like it. It's a long-term play.
Tim, thank you very much indeed.
Thank you, Andrew.
Tim Regan, Managing Director and Portfolio Manager at Kingwest and Company.